Okay, let me start the webinar. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. We are at the fag end of the year 2013, 30th of December. And this week consists of 30th December to 3rd of January. So the year 2013 will get over, and then subsequently the new year will start in this week. And in a week wherein a month gets over and the new month begins, you come across the big volatile moves in order to handle the derivative market. At this time, it is going to be the year end and the new year beginning. So you can understand the amount of volatility the market could bring in spite of the holidays in many parts of the world for the New Year Eve. In thin volume conditions, the players are expected to make very big moves. Last week, you would have noticed that on Friday, they made a very good rise and a quick drop. So a rise of about 150 pips and a drop of about 100 pips. That is the type of pump and dump move they are expected to make during this particular time frame. So keep in mind that no charts will be able to indicate when exactly the reversal is going to happen in the market. Even though many people anticipate there could be a good correction in the market, as one-sided gains were seen in the case of Euro, GBP as well as USD Yen. So all are expecting the reversal. And if you see in FX Street homepage that the analysts are of the opinion that Euro and GBP could eventually drop. But that is true, but they are not going to do it so easily. You know that when the market was near that of the low and it was just making the lower level consolidation with a downward stop, and many were expecting the rise, and the market was not making the rise. Instead, frequent stop-ins, they have been doing it. And in the process, what happened that the traders lost patience and started doing sell and buy trade. And during that particular time frame, the players have gained the level slowly. Now, opposite is expected to happen at the higher levels, because now we have come to that of the fag end of the year. The yearly trend reversal is expected to happen in a very big way. Normally, the market takes a longer duration to gain the levels, but a very short duration to drop and lose all the levels. So that is what we are expecting, or that is what the players are expected to do during this particular year end and the new year beginning time. But you have to keep it in mind that they will create all the bullish field in the market by consistently gaining the levels and later on suddenly make the drop when the people were not afraid of taking buy positions at the higher levels. So they always try to play with it of the psychology of the traders. On Friday, you would have noticed that when they gained the levels, and I have seen in FXStreet.net chat forum that many people were willing to take the higher level buys. And there are some people say that avoid taking at the topmost level. But the traders develop the feel that any level we buy, we are expecting a big profit, especially when they show the new highs. And the chart will not be able to explain immediately what is going to be the scenario in the market once they breach the all-time high or about 200 days high or 3 months high and things like that. So in such a situation, the traders tend to take the long position. Besides, those who have gone short at the lower level, they become very afraid because of the moves and they go in for a short covering. But invariably, after testing their patience, the players tend to make the drop. So this is what we need to understand. The players create the market sentiments and act against that of the traders and don't relate the currencies to one another. And if you follow Australian dollar, it might be making continuous drop, but Euro and GBP, they have been gaining. And when you see that Euro and GBP are gaining, so USD Yen is expected to drop, but they may gain the levels there again. And if you think that Euro is making the rise, so USD Yen is expected to make a corresponding drop. But you would have noticed on Friday that they gained back all the last levels in the case of USD CHF, but still they have been holding in a positive range Euro and also at a higher level in the case of GBP. So when you try to compare the currencies, then invariably you find the correlation become short-lived, and then subsequently they make the contrarian move to confuse the traders and also to handle the crosses. So keep in mind the players are here to make money, especially during the year-end and the new year beginning time. That is why you come across such big volatilities. Why they should do it during the year-end in such a special way? Because most of the forward contracts of the exporters and the importers might expire, and they have to take the new contracts for the ensuing months of the new year. Besides the derivative market, a lot of people take the options and the futures positions. So the players try to show some extreme moves and induce the traders to take such extreme higher level buys and the lower level sell positions in the derivative market. And so keep in mind that the players are here to create the market sentiment and act against that of the traders after the commitment of the positions. So if you keep that in mind, then you will be able to understand what they could do it during the New Year time. So first of all, I'll give the forecast for this week, and later on I'll give a brief forecast with regard to the year 2014 today. Now coming to that of the expected market moves for this particular week. It is the last week of the year, and the yearly trend reversal move is expected. And they are expected to gain big during 30th and 31st, and then subsequently they are expected to make the slide, similar to that of Friday slide, what they have done it. So, last Thursday and Friday slide. So, on 30th, today, swing and rise moves are expected during that of the Japanese session. Swing and quick rise could be seen during that of the European session, using some data release or whatever it is as a trigger, and then they are expected to make some profit booking, create the field that potential is formed, so the market is expected to correct. Subsequently, tomorrow they are expected to gain the levels again during swing and during the Japanese session, and make one drop, then quick rise during the European session, and in the session they are expected to make a very quick rise for the year end. Then afterwards, during start of the Japanese session, because many of the platform might be closed, but still you could come across some moves happening in the market, and then a small slide from there. Then afterwards a dip and rise and swing and come up moves could be seen for the new year and on January. Then of January they are expected to make a dip and a rise, then swing and drop during the European session, and swing and rise moves could be seen during the session. Then on 3rd of January, swing and drop could be seen during Japanese session, and swing and firm up could be seen during European session, and swing and rise could be seen in the case of Euro and GBP on Friday. So this week, if you notice that not much of a data release is there, and the week following, that is 6th to 10th, you come across the prime data release. So like the interest rate decisions and non-farm payroll, etc. So the players are expected to make further volatile moves during that particular time frame, 6th to 10th. And as I explained earlier, occasions that the yearly trend reversal will prevail for 2 months. That is the month of December and also the month of January. And you will come across big pump and dump moves happening in the market suddenly. And so if you wait for such moves to happen in the market and take sell positions in the case of Euro and GBP, you will be able to quickly see the profit. You can also do buy and sell trade, but use the hedging order to limit the risk and see that you are not caught vulnerably with the higher level long positions, because the players are here to make They continued correction in the month of January and February during the new year. Normally, the new year time, they will try to position themselves with huge buy positions, but they will continue to make the drop. So when they make the drop, the traders will think that it is a sell and buy trade opportunity. So they will freely sell and buy at a lower level, look for supports and resistance. Whenever the resistance comes or whenever a small pullback comes, the traders will sell. They will make a drop and the traders will book profit. And the traders will become greedy of taking more positions after the final drop. They sell positions expecting further newer lows. But the players are here to absorb all the such sell positions and continue to gain the levels. And the lowest level short sellers will be trapped vulnerably when they continue to rise from the month of March. So keep in mind that in a daily basis, when the market is near the low, you aim for sell. But when the market is near the low, always see that whether the new low is being respected during that of the early or the late sessions, and then subsequently try to take only buy position when the new low is not being breached for more than 30 minutes, when they come closer to that during the early or the late sessions. Now it is a mid session. So you wait for the late sessions to come and see whether they are holding the new low, or whether they are holding the initial low and not breach it for more than 30 minutes in order to initiate the buy positions. Then also, if they breach the new low and stay below the new low for more than 30 minutes for 2 hours, understand they wanted to make an intentional drop, then you can do a sell and buy trade as a breakout trade on the downside, but still keep the hedge order to limit the risk. So since this particular time frame will give the either way trading opportunities in the market, so avoid doing position trade. Try to grab the profit as quickly as possible when they stall gaining the levels or stall dropping the levels. So that way you should be able to grab the profit. So this is a forecast for this particular week. And I have chosen to give the webinar today mainly in order to explain to you how the yearly trend reversal is expected to happen. So they are expected to quickly gain the levels as well as drop the levels. So here you come across the expected market range during this particular week, and they could revisit 1.3850 and above in this particular early part of this week. So they will be doing the high level volatile move, that is high level consolidation with a quick upward stop and or extended upward move or extended stop and then drop. Already they have done one gain and the drop to build the sell position and book profit, and again they will try to gain and sell, and then subsequently when the market drops they will continue to sell or withdraw the buy support, so automatically the market will slowly fall. So till such time they are expected to make during this yearly trend reversal time the extended move on the upside. So hit all the sell stops and afterwards try to drop the market. So it is not easy that once you find that, okay, they reached the high and we can do a sell and buy trade, but they will discourage you by hitting your stops. So what is the best way to trade during this particular time frame? So wait for them to make some extended quick moves on the upside. Then once they stall cutting the new high for more than 30 minutes, take sell positions, you will be able to quickly see the profit rather than trying to take a buy or trying to take a sell and wait for the market to move in our favor, but they are expected to make the high level consolidation with the upward stop and move very frequently during this particular time frame. And they are not going to drop it in a big way till next week. So you will come across the range bound moves in the market. Some extreme moves on the downside, they may do it and then reverse it again to 1.37. So in the case of Euro, they will be holding around that 1.37 and make downward move and make an upward move alternatively. In the case of GBP, they are holding around 64 level, 64.72 and things like that. And they are expected to make again the either way move about 100 pips on the upside and 100 to 200 pips on the downside in order to create the sentiments and also to bring in big moves in the case of Euro GBP cross. And in the case of yen, they are expected to make the high level consolidation 105 area. And after brief upward stoppings, they are expected to make the drop to that of 1.03. And that could create the feel for many that Euro and GBP are expected to rise. But the players are expected to drop Euro and GBP along with that of USD yen in order to make a big drop in the case of yen crosses. And you know that how consistently they've been gaining the levels in the case of yen crosses during last week. And you see that all the levels which they have been shown as 1.641 was shown as a high, and they have gone to 1.145. And in the case of GBP yen, 167 was shown as a high, and subsequently they went up to 164. That is how they are expected to gain the levels. And so keep in mind that you cannot do position trade, and you can only identify the type of moves they are doing it and accordingly take positions. Whenever they are showing a USD gaining move, for example now, Euro is showing negative net change, GBP is showing negative net change, USD yen is showing positive net change, which is a USD gaining move. And when they are making such moves, you will find only consolidation happening in the case of yen crosses with a nominal gain of 10 pips, 14 pips, etc. But when they try to make the one-sided move of gaining the levels in the case of Euro, USD yen and GBP, then you try to see that they stop cutting the new high in the case of Euro, new high in the case of yen, new high in the case of GBP, and take sell positions there for 30 minutes, then take sell positions in yen crosses. You will be able to make considerable profit on the downside move. So understand the behavior of each and every currency and how the players are handling them in order to trap the traders, and accordingly you commit positions so that you should be able to see easy profit in the market. Don't complicate yourself, and the players are here to show the supports and the resistance will work, or supply and demand will work, but they are expected to make some extreme volatile moves, and then immediately you will say the chart is not working because of fundamentals and because of technicals alternatively. So try to focus on the price action during different time frames. And in a thin volume condition, the players are expected to make big moves. And it is not that they need to always do consolidation in a low volume condition. Then in the case of CHF, the downside is very limited, and they are expected. And here it shows a wrong lower level and the higher level in this platform. But actually the initial low was 89.02 and the high was 89.35. And they are holding in this range. And they are expected to gain levels, and slowly upward moves are expected in the case of USD CHF. And also in the case of USD CAD, they are expected to make the range bound moves. And in the case of Australian dollar, they are expected to make an upward move. And at that time, you will find that Euro and GBP are making either way moves and making corrections. But Aussie, they will try to gain the levels before making a big drop in the case of Aussie to 0.85 area. Coming to that of the initial lows and the highs set for the day. Euro formed the initial low 1.3734. The high was 1.3769. They are simply holding it, but come closer to the low. They are likely to breach it in order to hit the close by stops. And then later on, they are expected to gain the levels in the case of Euro and GBP. GBP 1.6472 was the initial low. They just breached the 1 pip, and 1.6500 is the high that is not being breached. And in the case of yen, 105.17, 105.42 are the lows and the highs, and they are not breached. And here it shows wrongly the initial lows and the highs in the case of CHF, but 89.25 was the high, 89.02 is the low, and they just already breached 89.25 and going above. And USD CHF is slowly expected to gain the levels. Even small dips in the case of Euro, they are expected to make big gains. Initially, they will be holding lower, in order to handle Euro CHF cross around 1.22 area, and then subsequently they are expected to gain the levels. The European crosses also they will try to handle it. And you know that they will follow the sequential trend reversals. There is a commodity crosses, then followed by the commodities, and then yen crosses, and then majors, then European crosses. That will be the order of sequence in which they will be making the trend reversal moves. So if you follow them carefully, you will be able to take appropriately the positions in them and capture the profit. Need not do all the trades in Euro and GBP. Then in the case of USD CAD, 1.0696 is the low, 1.0728 is a high. They have reached the low, the high, and they are slowly expected to gain the levels in the case. But all downward moves are buy opportunities in the case of USD CAD. Then Australian dollar, 88.34 is the low, 88.66 is the high. They are just holding it. And if you see that Aussie, they are holding closer to the high, whereas Euro and the GBP, they are holding closer to the low. GBP also, they just reach the low gate. So this is how they are expected to bring in the contrarian moves. So only with the help of the live market code page, we'll be able to find how they are making the moves in the market. Accordingly, we can initiate your trades rather than simply correlate them and try to take positions. If we correlate Aussie and try to take positions in the case of Euro and GBP, it might work on certain occasions and may not work on certain other occasions. Whenever they are making the USD gaining or USD weakening move, it might work for a small swing. So now in the case of Euro, GBP and Australian dollar, the numerator currencies, they are showing negative exchange, and the denominator currency USD and USD CHF and the USD CAD are showing positive net change. It is a typical USD gaining move, but then subsequently they are expected to make the contrarian move very frequently in the market. So keep that in mind and trade accordingly. So for the intraday trades, we note down the initial lows and the highs in 4 majors and 2 commodity pairs and try to enter when the market has stopped breaching the new low or the initial low for more than 30 minutes during the early or the late sessions. So now it is in the mid session. So 6 to 7:30 is the late session. So wait till 6 GMT. Now they are handling the crosses, the Aussie crosses and also the commodity crosses. So avoid taking any position now. Wait for 6 GMT and then they will start making the active moves in the case of the numerator or act in the case of the majors. At that time, they already made the drop and they are expected to gain the levels. So once they stop cutting the new low for more than 30 minutes or reverse and come above that of the initial low in less than 30 minutes and stay above there for 30 minutes, try to take a long position so that you will be able to get an assured profit. That way you can do the buy and sell trade. Simply thinking that, okay, it has made a good drop, so it has to go up, then you might see they might make further drop. Because such extreme moves are part of this move during this particular time frame. They always use the stop or the hedging order to limit the risk, especially during this particular volatile time. And once the position makes about 25 pips profit, keep stop at entry so that there is no risk. And then subsequently, try to see that you use the trailing stop to protect minimum profit and trailing take profit order in order to maximize the profit. So the session timings will continue to be the same till March in the new year. So make a note of the time and also keep in mind that they handle only 2 currencies at a given time and gap time moves are false moves, and these are all the preconditions. Early in the late sessions they handle the majors and the mid sessions they handle the crosses. So you can take a screenshot and try to follow the live market code page using these time frame. Then you will be able to really understand how they are simply bringing in the reversal in the market as soon as the time gets over. Now coming to the yearly forecast. The year 2014. Now, this particular year, 2014, which we'll be seeing in 2 days' time, is expected to bring in very aggressive moves in the market. And people might be thinking that it is due to that of their volume, but the players are expected to become more impulsive, and they wanted to earn more from that of the market. And when the earning comes down, they become very aggressive in making such quick moves in the market. And they are expected to make aggressive moves. And you might come across that they will try to use the quantity using is getting over, and the tapering situation is going to prevail, and they will try to make use of it and frequently book profits and see that they are less committed in the market. Because of that, you will come across very aggressive moves. So aggressive moves mostly in the form of extended stop and moves. So quickly they will rise and simply reverse it in a matter of about 1 or 2 hours. And similarly, quickly make a big drop and just reverse and go higher in a matter of about 2-3 hours. So that sort of moves are expected to happen in this particular year. So those who are weak-hearted, avoid taking positions and see that you have got adequate equity and take very less positions so that you don't lose your account during such big moves happening in the market. Throughout the year, you will come across such moves are expected to happen. In 2013, we have seen many of the days with consolidations, etc. But this time, it is going to be aggressive. When the volume comes down, in order to attract more volumes, the players are here to bring in aggressive moves. They might be triggered to become more emotional. As a result, you will find they will make some aggressive moves in the market. Why I'm insisting upon it, this year is going to bring in a lot of commotions in the market. You just watch and later on you will be able to understand. In 2014, extreme moves could be seen in the case of USD and yen crosses. And you know that carry trade was one of the story, what they used earlier occasions, that the yen crosses continue to gain the levels for several thousand pips. And similarly, USD yen was also making very big rise at that time. And people simply said that it is a carry trade mechanism wherein even the Japanese housewives were just liquidating yen and trying to invest in New Zealand and other places where the interest rate is high. As a result, you find the continued gaining the levels in the case of the yen crosses. But they are expected to make such extreme moves in the case of the yen crosses. So it is not like the earlier occasions wherein you can do either way trade in the case of the yen crosses, and frequently you will come across the support turning resistance, resistant turning supports and things like that happening in the market. So, you know that in earlier years, in 1999, 2002 and things like that, people were simply telling yen is unpredictable. No, it does not obey to that of the fundamentals or technicals. A similar situation is expected to happen in 2014. The contrary and regular moves could alternate during this particular time frame. Then Euro and GBP are expected to undergo big downward moves till early March 2014. Then the upward trending moves could be seen from the month of May 2014. So try to find the overall trend and accordingly you can trade. So now you can understand that I'm not all the time giving the buy and sell calls in the case of Euro and GBP, because based on the forecast and what the algorithm says, I am just fine-tuning the trading strategies. That is all. Then USD CHF and USD CAD are to gain big during this particular time frame. Then Aussie could undergo the downward move. So Aussie could go to 0.85, and you know that earlier during the yearly trend reversal moves, Aussie came down to that of 0.67. And similar such moves, they could do it. In the case of Aussie, they could go to 0.85, 0.80, 0.76 and things like that. And Less gain, more drop. Less gain, more drops moves could be seen in the case of Aussie. But over a period of a long time, but it cannot participate along with that of the gains in the case of Euro and GBP in the coming year. Then many of the regional currencies, unusually, they are expected to gain against US dollar. We have seen that last year, the fact that is 2013, roughly from that of mid-2013, many of the regional currencies have weakened and shown multi-year trend reversals. And they are expected to gain the levels against that of the correlations that are of Euro and GBP. And also USD yen. So normally you come across the regional currencies like Indian rupee, then dollar, and Mexican peso and things like that. And such currencies have weakened against US dollar, and they are expected to strengthen from this year, 2014. Then with regard to the commodity markets, gold, silver, and crude could show gaining moves. And people might say that it is a safe haven strategy. When the market condition becomes uncertain, then people jump into that of such safe havens. So you will come across a separate story that gold, silver, crude, etc. are safe havens, and also US dollar is safe havens and things like that during early part of 2014. Then stock markets to undergo big corrective wave. So keep that in mind. And there could be major economic recovery in many countries when compared to USA. And many people are telling or envisaging that tapering will bring in a fast economic growth in the case of US, but when compared to US, rest of the countries should be able to show much better economic recovery. And this is what anticipated as per my algorithm. I am not biased with any country or any of the regional currencies or any currencies for that matter. And this is the derivation from absolutely a scientific derivation from that of my forecast model. So if you have got any questions, you can ask the questions. I'll be willing to answer those questions. So it is already 5:30 GMT. Okay, I joined late. How is the trend for you on GBP? Okay, let me just show the slides again with regard to the forecast. This is going to be the trend during till end of the year. There could be quick gains and drop, quick gains and drop. And then early part of January, there will be a drop. And then next week, they will gain quickly again in anticipation of the prime data release, and again they are expected to continue that growth. The range at which the currencies are expected to make the moves is shown here. So primarily, the currencies, these three currencies are expected to show high level consolidation with the upward stopping, and the denominator currencies are expected to make the upward move, and Aussie is also expected to make upward move in order to handle the commodity process. This is the forecast, the general forecast for the year. Now, okay, Ines got a question. Can you explain a bit about permissible pip levels? Okay, normally in the case of Euro, 150 pips on the upside or 150 pips on the downside. And in lower limit condition, they can just gain it up to 170 or 190 in the case of Euro, and then come back to that of 150. That's what you would have noticed on Friday. In the case of GBP, they can do up to 250 pips, but nowadays they are not doing it. They are only making the rise to that of about 200 pips. And USD CHF yen, also Canadian dollar, is about 200 pips in a given range, is a permissible level. Aussie is at 100 pips in a day. Okay. Karthik Raja. When we can expect drop in the case of yen? Yeah, from next week we should be able to see that. But still, you have to be very careful because the yearly trend reversal will be there and they are expected to make the contrarian move as well as the regular moves like USD weakening or the USD gaining move in the case of yen, USD yen. So accordingly, you have to note down whether they are doing the contrarian move or the regular move by looking into the net changes in the live market port page. Whenever they make the contrarian move, understand that they are handling the yen crosses. At that time, try to take positions. You will be able to quickly book profit. Every time looking into the euro yen and GBP yen may not give promisable profit. Then surely. Please comment of USD Singapore range. Okay, USD Singapore dollar. See, Singapore dollar is also a regional currency, but it is predominantly traded in Singapore and Australia and all Southeast Asian countries. So it is currently trading around 1.26 area, and Singapore dollar is expected to gain to the level of 1.3032 area, and then USD SGD is expected to gain to 1.32 area, and then coming to 1.22 area. That will be the range, and it will also strengthen against US dollar this year. Then Google, explain what happened on Friday. So Friday they made a quick rise and a quick drop. In the case of euro and GBP, that's nothing but a pump and dump move, a normal move during the trend reversal time. They quickly gain about 150, 200 pips and drop about 150 pips back in a matter of about 2 hours or 3 hours. Then chow here. How about Euro GBP cross? Euro GBP cross, they have to bring in some extreme moves again. They came down to 82 area and then came to 83, 84. And now this time they are expected to come to that of 0.78 area before making the next reversal. Then George Rehan, what is a fee for teaching how to derive weekly algorithm? So I don't teach it to anybody, sir. I only give the market reading technique in the training, but forecast algorithm is proprietary. Then Gohanandan, what happened with Euro and GBP? That's what I explained. Okay, no more questions. So time is up. So this is the forecast for the coming year. Then during the New Year Asian Session Live Market Analysis, I will try to explain more about the market moves we could see. So I take this opportunity to FX Trade for the facilities given during this year and the SR years for presenting the webinars. I am thankful to them and also thankful to you who have come here to attend the webinar with the interest on trying to learn to get rid of the market fear. Then I'm supposed to give it on 6th of Jan, the next Monday, but I'll be preoccupied on that day. So 7th of January, Tuesday, hopefully I'll be presenting the next Asian Session Live Market Analysis webinar. And until then, wish you a very happy and prosperous new year and profitable new year to all. So I will try to post the recording of the webinar in inoindices.com/blog and fxtrade.net, and you can refer to it from time to time. And if you've got any doubts during this particular week, you can ask questions there. I'll be willing to answer to those questions. Thank you one and all. Wish you all very happy new year and profitable trading in the days to come.